Hey everyone, it's Patrick Langham's Cross Country Mortgage. It's Money Tip Monday. Today we're going to talk about canceling PMI or private mortgage insurance on a conventional loan that you have right now. And so we're talking about conventional loans, not FHA. FHA has completely different rules. You may or may not be able to cancel that private mortgage insurance. And VA, you don't have to pay mortgage insurance. So we're talking about conventional loans where you're paying PMI or mortgage insurance. To figure out whether you're paying PMI or mortgage insurance, just take a look at your monthly billing statement. And when it breaks down your payment where everything's being distributed, you may have some going towards principal and interest, some towards taxes, some towards home insurance. Look for PMI or private mortgage insurance. That's how you know you're paying it. PMI is required when you buy a home or refinance and don't have 20% equity. So when you're buying a home, if you're doing 20% down, you wouldn't have PMI. If you're doing a refinance and have 20% equity, you don't need PMI. But if you don't have that 20% equity, typically PMI is required. All PMI is it's insurance for your lender. So if you were to stop making payments, your lender would actually file a claim and get reimbursed some of the money they lost. So that PMI is just insurance for the lender. They want you to have that insurance policy if you don't have a ton of equity in the home to kind of protect them and their investment, their asset, their collateral. So getting rid of PMI, there's a few ways to do it. The first way is you pay down your loan balance to 80% of what you bought the home for, or the appraised value, whichever was lower when you did your loan. So to figure out which one was lower, probably just got to call up your mortgage company, the number on the bill, and ask them, hey, what was the value or the price on my home, and what balance do I need to get to be at 80% and get rid of PMI. Now, when you hit 80% balance, the weird part is you actually have to call your lender to get it removed. It doesn't just go away. It will automatically go away when you hit 78%. So when your balance is 78% of what you paid for the home or the appraised value, then that PMI would go away. So just call up your lender, figure out where that 80% is, and over time you'll hit it. You can pay a little extra to hit it, or you may already be there and you can get it removed. The other way to get PMI removed is doing a new value. So doing a new appraisal, and if the new value on the home is higher so that your current balance is 80% of the new value, you may be able to get rid of PMI. So again, you want to call up the phone number on your bill and ask them, hey, can I do an appraisal to get rid of PMI? I think my value's gone up and I'd like to see if I can get rid of it. Now, caveat on that, different lenders can have different rules as to whether they will let you use a new appraisal to get rid of the PMI. A lot of the rules out there are you have had to have the loan for 2 years and made all payments on time, and there could be some other caveats that they have. But in general, have the loan 2 years. You may be able to get the PMI removed with an appraisal. So you may have to pay for an appraisal, but at least you don't have to pay all the fees involved in a refinance. The last option would be if you've done upgrades to the home. So let's say you finished a basement, remodeled a kitchen, added a room, anything like that. Same thing, you may be able to call up your lender, say, hey, I've done some remodels. I think my home's worth a lot more based on that. I think I'm at 80% of the new value, and they may require an appraisal to get that PMI removed. So there's a few ways to do it. If you have questions, give me a call, but hopefully that helps, and hopefully you can save a little bit of money knocking out that PMI. Thanks.